Bismillahirrahmanirrahim. This is the fourth video on financial accounting and second on accounting information system. In this video, we are going to talk about account and recording process. We will rather talk in detail about the journalizing, the steps in journalizing, and how do we debit and credit a transaction while journalizing. Please like, subscribe, and share my channel to search for accounting lessons and hit the notification bell button to alert you for the latest video. For all of your questions, comments, and suggestions, please put them in the comment section below. And for webinar and guest speaker invites, please send me a message at accountingamir@gmail.com. Accounting is AK. We hope that this video helps students in their academic development and teachers in enhancing their lesson plans and teaching methodologies. In the previous video, we have talked about the analyzing of a transaction and how we record them in the accounting equation. In this video, we are going to talk at length about the journal entries and how we make the debit and credit while journalizing. So the recording process starts with analyzing, and this is what we have done in the previous video. In this video, we are going to talk about the recording the transactions in the journal, and then we will talk about the transfer of journal and other things in the videos to follow. Uh, Journal is the book of original entry, that is, we record the transactions in a journal entry first, and then these transactions are recorded in a chronological order. When we say chronological order, it means according to the date. It discloses the complete effect of the transaction. It provides a chronological or record according to the date, and it helps to prevent or locate errors because the debit and credit amounts can be easily compared. Journalizing, let us look into the transaction over here. Presented below is information related to Sarah Corporation. Sarah issued common stock in exchange of 10,000 cash. They have borrowed 5,000 by signing a note, and they have purchased office equipment for 5,000. So we have to journalize these transactions, and let us see how we do that. So when Sarah has issued common stock in exchange of for 10,000 cash. Now, if you can remember the previous video, we are using the same transactions that were there, and this is transaction number one, and you can see that here Sarah has invested cash of 10,000 is invested in Sarah Corporation. And throughout our videos, we are going to use the same set of transactions. So, if you can remember, while analyzing, asset cash was increased by 10,000 and the common stock has increased by 10,000. And I would like to show you this rule, and this is going to help you in the whole process. Uh, so as you can see that the asset cash is increasing, and if asset is increasing, we are going to debit it. And if common stock is going to increase, the equity, if you can remember, with under equity we have the common stock. So common stock is also increasing. An increase in equity is credit. So the general entry will be cash debit, and don't forget that we have to leave some space in while crediting. This is called indenting. And common stock is going to be credit by 10,000. Now debit amount will be put in the debit column, and credit amount will be recorded in the credit column. You can see that the debit is equal to credit. We look into another transaction now. They have borrowed 5,000 by signing a note. So we again follow the same. You can see that asset is increasing by 5,000, and this is by signing a note, that is a notes payable. The liability is increasing. So increase in asset is debit, and increase in liability is credit. So we first record the debit. So cash is debit by 5,000. The amount will be written in the debit column because cash is debit. We leave some space, and then we have notes payable credit by 5,000 because increase in liability is credit. We move on to the next transaction. Syra purchase equipment for 5,000. So equipment is an asset that is increasing. Cash is an asset and cash is decreasing. So once again, you can see that increase in increase in asset is debit, and decrease in asset is credit. Don't forget, we first record the debit. So equipment is going to be debit by 5,000 amount. The amount has to be in the debit column, and cash will be credit by 5,000, and the amount will be in the credit column. Okay, let us look into another example. Like as president and sole stockholder, Kate Brown engaged in the following activities in establishing her salon. Here it is incorporation. Opened a bank account in the name of Here it is incorporation and deposited $20,000 of her own money in this account in exchange of shares of common stock. Purchase equipment on account for to be paid in 30 days for a total of 4,800, and then interviewed three persons for the position of hair stylist. We have to record these transactions, or rather we have to journalize these transactions. So when she opens a bank account, we again put it in the accounting equation. You can see that cash is going to increase because money is coming into the business by 20,000, and the common stock, that is the equity, is also increasing by 20,000. Now increase in asset is debit, that's why cash is debit. And don't, you can see that we have indent, we have to leave some space when we record the credit, and common stock is credit by 20,000. We look another transaction. Purchase equipment on account to be paid for a total of for a total cost of 4,800. And you can see in this illustration, uh, equipment is increasing by 4,800, and because this is on account, so the liability is increasing by 4,800. So increase in asset is debit and indent, and increase in liability is credit. Then the third one, interviewed three persons for a position of hairstylist. So when she is interviewing, So this is not a economic event and we are not going to record this transaction. Okay. So that is what we have learned so far, that journalizing is a double entry accounting system. Each transaction must affect two or more accounts to keep the basic accounting equation balanced. Recording done by debiting at least one account and crediting another. You cannot just debit in a transaction. There will be a debit and there must be a corresponding credit as well. And the debit must equal the credit for after we record each transaction. So that is how we will talk about this as we progress, and this is only how this equation is applicable in the case of sole proprietorship, where we have the owner's capital, and in case of sole proprietorship or partnership, they can withdraw money. So that's why we have a additional account of drawing, but we will not find drawing when it comes to a corporation. In the case of corporation, or on the basis of which these videos are prepared, we are going to have the assets, liabilities, common stock, retained earning, dividends, revenue, and expenses. Okay. Now, these transactions are the same that we have done in the previous video. As I say, we have all these transactions are there where we have analyzed the transaction and recorded them in the accounting equation. In this video, we are going to journalize, and that's why, but then it is easy to recall what we have done. And what we are going to do is we are going to follow these three things over here. First of all, determine what type of account is involved, determine what item increase or decrease and by how much, and translate the increase and decrease into debit and credit. So on October 1, stockholders invest 10,000 cash in an outdoor guide service company to be known as Syra Corporation. Uh, so in this case, cash is increasing, and at the same time common stock is also increasing. If this is what we have done in the previous video, there is an increase in cash and increase in common stock. And once again, uh, increase in asset is debit, and increase in equity is credit, and that is what we have done over here. I would prefer to use another, this one, that gives a much better explanation. um, so there is a debit in debit in so debit increase in asset, so cash is debit, and credit increase in common stock, and that's why it is credit. We will talk about posting in the next video, so I will intentionally ignore this part at this time. We go to the next transaction. On October 1, Sarah borrows cash for 5,000, and the two type of accounts being affected here are cash and notes payable. Cash is increasing and so is the liability. This is what we have done in the previous video. And once again, uh, there is an increase in cash. Increase in cash is debit, so cash is debit, and increase in liabilities is credit, so that's why it is credit over here. We move on to the next transaction. On October 2, Sarah used 5,000 cash to purchase equipment. Now, the two accounts being affected are cash and equipment. Both of them are assets, and increase in asset is debit, increase in decrease in asset is credit. So equipment is increasing and cash is decreasing. Increase in equipment is debit and cash is credit. We will talk about this in the next video. Then on October 2, Sarah received a 1200 cash advance. And if you can remember, when we receive cash in advance, it is not a revenue, it is a unearned service revenue. I have already explained this in the previous video. So once again, increase in asset is debit, increase in liability is credit. So cash is debit and unearned revenue is credit. We move on to the next transaction. Um, on October 3, Sarah received 10,000 in cash from Copa Company for guide service provided. So the two accounts affected are asset, that is cash is increasing and so is the revenue, and cash is an asset, increase in asset is debit, and increase in revenue is, sorry, increase in revenue is credit. So cash is debit and revenue is credit. Don't, you can see that when we record the credit, we leave some space on the left hand side. This is called indenting. We will talk about this in the next video. Then on October 3, Sarah paid office rent, and the two accounts being affected are cash and expenses. Asset is decreasing, so that's why cash will be credit in this case, and expense are going to decrease our stockholder equity, so they are going to be debited. Now what you can see over here, that why did I circle the debit with a plus? Because expenses are increasing. When you are paying expenses are increasing. Increase in expense will decrease the profit, and decrease in this will also decrease the retained earning and the stockholder equity. So that's why expenses are debit and cash is credit in this situation or transaction. On October 4, Sarah paid 600 for 1 year insurance. Now, when Sarah is paying for 1 year, this is a prepaid insurance, and our asset is increasing, and we are paying cash, and decrease in asset is credit. That's why prepaid insurance is debit and cash is credit. Then on October 5, Sarah purchased an estimated 3 months of supplies on account from Aero Supplies for 2,500. Uh, so supplies is an asset. We have already explained in the previous video. Asset is increasing and that is going to be debit. Our liabilities are increasing and that is going to be credit. So increase in asset is debit, increase in liability is credit. And you can see that the total of debit is equal to the total of credit. Then on October 9, Sarah hired 4 employees to begin work on October 15. Each employee will receive a weekly salary of 500 for 5 days per week, payable every 2 weeks. First payment is on 26th of October. So obviously this is right now on this date, that is October 9, the transaction has not occurred. So we are not going to record this transaction. We will, and that is there. We will talk about it as we progress in the discussion. Then on October 20, they have paid 500 cash dividend. Now, when we are paying cash, cash is an asset, it is decreasing, so cash has to be credited, and dividend is increasing, and that is going to be credited. Sorry, dividend is increasing, so that's why it has to be debited. Dividend is debit and cash is credit. Then we move on to the next transaction. On October 26th, they have paid employee salaries of 4,000 in cash, and when they are paying salaries of 4,000, our cash will decrease and expenses are increasing. So, salaries expense is debit and cash is credit. Then on October 26, Sarah paid employees salaries of 4,000 in cash. So in this case, once again, uh, the asset cash is decreasing and the expenses are increasing. So increase in expense is debit and decrease in assets are credit. So cash, salaries, expense is debit and cash is credit. What may be interesting for you to observe that that we follow, sorry for keeping you waiting, give me a few minutes. You can see that the rule for the assets, expenses and dividend are the same. That is, increase in asset is debit, decrease in asset is credit. Same is the case for dividend and expense. If dividend and expense they are increasing, they are debit, and if they are decreasing, they are credit. The rule for liabilities, common stock and revenue are the same. That is, they are credit if they are increasing and debit if they are decreasing. So this completes our second video on okay, and then like all these journal entries that we have discussed so far, one, two, all these journal entries, they have, this is how we are going to do it. This is obviously to explain how we analyze and how we journalize. We will talk about posting in the next video, but then this is how the journal entry, journalizing is going to look like. On the left hand side we have the dates of the transaction. You can see that they are in the chronological order. We record the debit first. This is a rule. We record debit, we have to leave some space for the credit, and the debit must be equal to credit. If they are not equal, then there is a mistake. So this completes the second video on accounting information system. I hope you have enjoyed this presentation, and if you found value in this video, then please like, subscribe and share my channel and hit the notification bell button to alert you for the latest video. For webinar and guest speaker invites, please send me a message at accountingamir@gmail.com. Accounting is AK. Remember, effective questioning brings insight, which fuels curiosity, which cultivates wisdom. If you have any question or any suggestion regarding this session, then please put them in the comment box below or by email, and inshallah I will reply you back. Thank you so much and happy learning.